So now on US30, we see price break above this high. Let's imagine that on the 4-hour time frame, all this price action has not happened. Let me use my vanishing box. All this price action has not happened. Alright, now as price created this fair value area by breaking above here, what price action or what um PDRE do we see that is below this fair value area? This fair value gap 1, this other block 2. Now these are areas where price can come and create a base from. Now price could come there and create a base, or price could actually use anywhere beneath this fair value area. But as much as price has come beneath this fair value area, fair value has been offered, then you don't want to expect deeper retracement anymore, because this fair value gap over here has been used anyway. So now fast forward to today, or fast forward to today, current price action, it happened very choppy, very choppy. This was a very long time of consolidation, but on the daily time frame you can see the price action very clean. Now we see price come into this fair value area, creating a bearish daily fair value gap into it and creating a bullish fair value gap out of it. Now this bullish fair value gap indicates that the bullish momentum has resumed. A bearish fair value gap indicates that the bearish retracement has momentum. Alright, so after price created the base, it created a bullish fair value gap. How many days of consolidation? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. That's about 2 weeks. 2 weeks of that is 10 trading days, 10 working days, 2 weeks of consolidation before this expansion out here. Now, would I have been able to avoid trading for 2 weeks? Definitely. If I'm looking at other pairs, I should have been able to avoid US30. But at the moment, that is about 2 weeks ago, 1 month ago, I was trading just about 3 pairs, GBP USD, either USD and US30, sometimes gold. On the 4-hour time frame now, once on the daily time frame, once you see price go into your fair value area with a fair value gap, you are waiting for a fair value gap to come out. It may not come out from the fair value area, it may still happen beneath the fair value area, but that is your signature that the momentum is about to resume. If we go to the 4-hour time frame, we see where it happens cleanly. Price kept creating bearish fair value gap from the 4-hour time frame to the downside. And as much as this is still in play, it means bearishness still has momentum. I caught this sell because I understood that bearishness was still in play. Alright, and price had not really come into the fair value area to offer fair value, which is to create a base. So I saw this sweep over here for the sell I caught. I saw this sweep and then this other block. I took the sell all the way down to here and I closed out, and that started the move. You see fair value gaps going in, fair value gaps over here going in, and over here fair value gap going out. This was what started the move. US30 did not provide enough opportunity to even engage. It just chopped and was very choppy until this expansion. Fair value gap going out. I didn't take this fair value gap. And why? Let me put that to notice. Why should I avoid that one? Because price was going into what? An opposing PDRE. What is stopping us from going higher? this. This is what is stopping us from going higher. This bearish fair value gap. All right. So it needs to be disrespected. It needs to be disrespected. All right. Now, when you are dealing with an opposing PDRA, when price is going into an opposing PDRA, the fair value gaps that are leading into that opposing PDRA, if it is being tapped for the first time, you want to avoid them. You are either waiting for price to create a new setup like this, fair value area, resistance, and then you start all over again. That is after price are taking this opposing PDRA, you are waiting for price to start over again and create this setup, or you are looking at the base. All right. So you see all this choppiness. What price was just trying to do was go back to the base, because all of this is not going to be strong enough. This is a daily fair value gap, an opposing PDRA that could cause price to retrace deeply or deeper. So any fair value gap that is close to it, close to its first tap, is likely to fail. All right. In my previous system, what I do is I trade random fair value gaps. As I see these, I measure out, I trade. Most of it work. It works. That's why I tell you, if you can trade only fair value gap and Fibonacci, you can be profitable 50% of the time. Well, to increase that win rate, you need to know where to look for those fair value gaps. Where should those fair value gaps form for that win rate to increase, for there to be more context? All right. And the best place for that fair value gap to form is after price has based or topped. In a bullish scenario, after price has based, which means the retracement is over. How do you know the retracement is over? When price has offered fair value gap and resume momentum. Resume momentum how? By offering fair value area, price falls with opposing fair value gaps into the fair value area, giving sellers an opportunity to be engaged in the market, and then price resumes momentum by a signature of a sharp turn entry, but on the 4-hour time frame. The 4-hour time frame is a very strong time frame because it's a hybrid time frame. It can serve as entry, it can serve as bias, as direction. You can use it as a higher time frame analysis to look for context area to frame your narrative, and it can also serve as entry only on that 4-hour time frame. So to me, the 4-hour time frame is like the strongest time frame. All right, it provides a lot of clarity. The daily and weekly just gives you direction. If you are a day trader, you cannot possibly be stabbing entries on daily time frame except you're a position holder or you're a very long term swing trader. But you see the 4-hour time frame, you can frame a structure, you can frame bias on the 4-hour time frame and then still frame entry on that same 4-hour time frame. What do we see? We see price fall into it like this with fair value gap, opposing fair value gap. You see price fall into our fair value area, and then once it picks, it could pick anything underneath the fair value area. That's why what you are waiting for is the resumption of momentum. You are not looking to let me catch this one, I think it's here, let me measure, where will I? You could be lucky sometimes, you will be right, but it is too random. All right, there's no structure in that. The main structure in it is when momentum resumes. You can decide to have picked this one, it failed. This one over here, I could have decided to pick this fair value gap. All right, it would have failed. And how many times would it fail? This would fail, this would fail, this will fail, this will fail. All right, I'm bullish, my direction is right, but how many times have I lost? One. This would eventually have failed if I didn't take profit here. 1, 2, 3, 4. You see the amount of times I would have lost. But if I just tabbed a buy here after price had come into the fair value area, offered fair value, came into it with bearish momentum, all right, and then created new bullish momentum as in fair value gap to the upside. That is what I would have been waiting for. And when we see price fall into it like this, we should not be looking at hesitations. We should stab. This still took a long time of consolidation, alright, but I would have refined this entry by definitely using my 1, 2, 3, and this is One, two, three. This is my third candle high. I would have refined this entry. I like to take the 70% level or the 79% level. I probably would have taken the 70% here because that's my favorite entry. Alright. What I like to do is I go to lower time frame and see if there are more reasons for price to retrace. If there's more reason, then I refine. You see, this signature here on the 1 hour time frame is a bullish fair value gap, but it has already been used. So what price can do is price can sweep this low. I call it a residue low. Price can sweep this low over here because on the 1 hour time frame this has been used. Can sweep this low and reverse, or price can just come for a fair value gap. Another block. Those are the two things price can do after taking after a fair value gap has been used. Price can sweep the low it left to resume, or it can just go back down to the other block, which it did here. Alright. So this is the reason price can come lower, and that's the reason you want to protect. I would have protected like this. Alright, if I had gotten involved on my 70% level. Just like that. So that is this trade. It's just, it's easy to say in hindsight because it has already happened. But the patience of waiting and seeing it play out, and you know how many emotions was invested in all this move leading down to here. A lot of losses, a lot of wins. I was able to catch one win, and the remaining thing US30 was giving me was losses. But when I established this foundational structure, structure rather, I now know where to wait for fair value gaps. Fair value gaps are best used after price has offered fair value by tapping into fair value areas on the 4 hour time frame now, on by tapping into fair value areas with opposing PDRA and then resuming momentum of its intended trend by the main trade PDRA, which is in this instance fair value gaps. Now I'll be moving away from US30 for a while now because it has now gone above this fair value area. Alright, this is our new fair value area over here, and this is our new resistance over here. This is our new resistance over here. I'm coming. Alright, so this is our new resistance. What would I be looking at in US30 going forward? I'll be looking at this. Take all of this out. Okay, let me just leave it right there. Don't want to delete some things that are there. Alright, I will be looking at price coming below this fair value area, alright, with bearish momentum, as in bearish fair value gaps, and then taking it could be any of, like, that is the randomity I'm trying to remove from my system. It could be any of these gaps. It could fall all the way here, all the way here, all the way here. It could be any of these gaps, all right? But since I don't know which of these gaps, I would not like to be losing like a noob trader, or you understand me? So what will I be doing? I'll just be sitting out, probably going to my daily time frame for a broader view and see what price does in the next couple of days. On Monday is going to be third candle, and I basically don't trade third candles like that. On next week is going to be third candle week, so I might not be touching US30 next week at all. But what I know is likely to happen is that if this setup does not provide me the fair value area kind of setup where I can follow through, then if it breaks this high, if this doesn't happen, all right, where I'll follow it from here like this, say I can follow it like this somewhere here and follow through. What will definitely happen is that when this happens and it breaks again, it would provide me something to follow. Most definitely another trend will come. That's one thing we need to understand in the forex market. Another trend will come. So what I'm waiting for now is this, any one of this. It can even come as far as coming to sweep here. You would think the market is bearish and then resume another bullishness to start buying. All right, so that's much what I'll be waiting for on US30. On US30, I really took one of the biggest win I took was the sell I caught all the way from here down to here, like so. Yes, like so. And I got out here. And that was the last biggest win, or last big win I got on US30. Everything has been break evens and losses. I missed this, and that was the last available opportunity. Everything here was manipulation. Everything there was manipulation. You should look at my pairs now. I've updated my my system. Now I'm looking at basically not looking at everything, but I am looking at I'm looking at least two pairs from each category. I could be looking at NAS and S&P, or I could be looking at US30 and ES and the NASDAQ. All right, and over the crosses, sometimes I'm not looking at any of them, but to create that opportunity, to be available whenever you see it, because this is a waiting strategy, but the strike rate is very high and the chances of you being correct is very high. That's what I'm waiting for on US30 right now, and that's about it. All right, perfect. Thank you.